Hey traders, welcome to Quantsapp. My name is Varun, and to track unusual change in options is something which I consider very important. So a lot of traders rely on technical analysis. Some trader rely on a bit of derivative analysis to identify the direction in the underlying. Now, what if I tell you that you can reverse engineer? You can look at the activity inside certain options and then anticipate or preempt what the action in underlying is about to be. So I firmly believe that since we are trading options and options is a very non-linear and dynamic instrument, we need to focus on the option based analytics and we need to check the activity or the unusual spikes of changes that occur in options, which can give you an edge in trading, because trading options is just about staying one step ahead from the other retail traders. So that is something that we will discuss today. We'll be looking at a solution by Quantsapp, and I hope you guys enjoy this particular video. I hope you guys learn something new. So the support so far has been tremendous for people who have been watching these videos. Obviously, you guys were the ones who demanded for English series, so I have started doing that. I hope you are enjoying that. Okay, thank you so much for your love and support. And for people who are new, who do not know me, my name is Varun. I am the trainer here at Quantsapp. I teach people how to trade and I teach people how I trade as well. So this is something that you will find very interesting. I hope you guys enjoy and let's start. Okay, without wasting a lot more time, we will start with that. Okay. So let me just share the screen of Quantsapp first. Okay. I will explain the concept as well because I want to make you guys conceptually strong, because that is one of my goals. I just don't want to, show you how to trade, but I want to show you what are the things where you can go wrong. Okay, because if you know where you're about to go wrong, then there is a less chance of you making that mistake. Okay, so that's something that I think of. So let's start. So this is the web app which I have opened. This is web.quantsapp.com. But if you are on Android, iOS, whatever mobile platform you are on, the app is available for free to download on the App Store. Okay, so you can install that as well. Now, without wasting time, I would just like to open the tool, which is known as unusual option activity. So just open this tool. It's a very simple, easy to use tool, unusual option activity. I'll explain a lot more things. Okay. So there are signal types here. So you can just click on it. So there is price, open interest, volume, and IV. So if there is an unusual change in either of these fields, you can get a simple signal right here. Okay. So it's no buy and sell signal. It's not any advisory or calls or something like that. It is a simple data driven tool which helps you understand where an option is experiencing unusual change when it comes to its premium, open interest, volume, and IV. So you can set individual of those, right? You can set individuals or you can set all, and that is also fine. Okay. You can select option type. So you can check the unusual change in futures as well as options. So you can add those, just call option, just put option, or maybe all, right? You can do that as well. Then we have built up type. Built up type will showcase long unwinding, short and short covering. So what exactly the price and open interest correlation is of that particular instrument, that can be shown. Okay. You can add symbols here. Okay. So if I just clear all, I'll maybe add Nifty and Bank Nifty both. Okay. So Bank Nifty and Nifty. So these are two of the most traded instruments or two of the most traded indices in the entire world, which is surprising, but that's fine. I'll add the monthly expiries for both of these instruments and I'll just add those. Okay. So Bank Nifty and Nifty monthly expiries. Okay. So we are on the last week of expiry. This is something that you will see a lot of activity in. All right. So this is how you can add those. Now I will explain each and every row. Signal type, like I said, you can see IV signals, or if I just select price, then you can see price signals. If I just add maybe OI, you can see there are no OI signals, but OI is denoted by this particular icon. And then we have volume as well. So volume also, I guess there are no signals, but that is fine. Okay. So you can add all of those. All right. After that, option type. Okay. Not option type, sorry. Symbol. There is the name of the stock. So since we have Nifty and Bank Nifty selected, you'll only get Nifty and Bank Nifty symbols. Expiry, we have a set expiry here as well. So you'll get the name of the expiry, whatever the expiry date is, you will get that. Then strike prices. So multiple strike prices, multiple options can have an unusual change in something. So you will find those as well. Okay. Type of option. So whether it's a call option, whether it's a put option, or if you have selected, if it's a future, you will find that as well. Signal previous value, signal current value. So depending on what the signal type is, it will show you the previous value. Okay. So the value at which the data started to change. So here you can see the previous value was 10.79, which is for the IV. So IV's previous value 10.79 and current value is 10.14. So IV has actually decreased here. That is something that you can see, right? So current value is 10.14, but the signal was actually, it started to monitor the particular change from 10.79. All right, so this was the previous value, this is the current value. You can see the absolute change percentage. So we can see a 6% decrease in IV of this particular option, right? There is price change as well, or price change or premium change. So you can see this particular option's absolute premium change. So the premium has increased by 37%, which is a good thing. Built up type, so it will showcase whether the price and open interest has a correlation or not. So as of now, I can see that there is a long built up. That means the price has increased of this option, and along with that, open interest has also increased. That is something that I know for sure. Okay, I don't even have to look at anything else. Now coming to the part how I use this, how I use this data. It is very interesting. You might find it very useful, but I'll just go to add symbol. I'll clear everything. I set all. So I want to look at all the data points with all the expiries. Okay, so you can add all expiries, but you can also add just the upcoming expiries. So let's say if I add 27 June and maybe 4th of July, you can add those as well, whatever you want, but you can set all expiries as well, right? So this is not recommended for everyone. This is not recommended for everyone. You can just add your favorite symbols and along with their monthly expiries, you can add those. So I will add this. I will add this. This is something that I'll add. So it will give me all the stocks as well. So I generally like to trade on stocks. So this is something that comes in handy, right? So this is here. So all scripts with the expiry of 27 June. You can add Bank Nifty, let's say, but this is fine for me. I don't trade just Bank Nifty. If you want, you can do that. So I'll just apply changes here. All right. Then you can go to built up type. Under built up type, I only like to select short covering. So if I am buying options, I only like to select short covering options because wherever the particular option is showcasing or it is experiencing short covering, that means its premium is increasing and its open interest is decreasing. So the good thing. All right. Then option type, you will just select call and put, right? You can select call and put, and signal type, I only select I. This is something that I do. I'll refresh this once so that you can actually see all of the signals. Okay. Then I will go to signal type, IV. You can copy this, by the way, call and put only. So no futures, and built up type is only short covering. Right. So these are all the signals. So this has actually filtered out the indices. It does not show you indices because this is just all the stocks. So this is showcasing you all the stocks. So during the live market, it has a lot more signals, but currently the market is closed. That's why it is only showing you the last of the signals. All right. Okay. Now, why do I specifically use it this way? Why did I specifically use it this way? So think of it this way. Okay. What exactly is IV? What exactly is IV? If you guessed implied volatility, then you are absolutely correct. So IV is nothing but implied volatility. Okay, IV is nothing but implied volatility. Implied volatility showcases the expected momentum of the underlying from an option writer. So whatever an option writer is expecting from the underlying momentum, that is something that you can gauge or preempt with the help of IV. Okay. After that, what you can do is you can correlate IV with premiums. Okay, so premium and IV, option premiums along with IV is directly correlated. So if option IVs are increasing, that means the options premium will also increase. It's as simple as that. So this is something that I like to use because whenever we are trying to decode which options premium is about to increase, we generally go for a directional approach. We try to see whether the stock is moving in a bullish direction or a bearish direction, but that is not something that I use. If IV of a particular option is increasing, let's say IV of a call option is increasing, that means the call sellers are expecting that the market will go bullish. So they are increasing the premiums. So you can directly assume which particular option is about to have its premium increased. So that is why I have selected IV as my choice of signals. Okay. After that, I have selected short covering. Why short covering? Because I want the option writers to square off. If option writers are squaring off their position, so for people who do not know, options open interest is viewed as from a seller's perspective. We normally assume that if an option has unwinding, that means the seller is squaring off. If an option has an addition in open interest, that means the seller is adding new positions or fresh positions. So that is the general idea. Okay, so short covering would indicate that the options premium is increasing, but its open interest is decreasing. So it's further confirmation that option writers are squaring off their positions. You can add all the build-ups as well, right? Let's say if I add long as well, it won't change that much, but still you can keep that. I just keep it to short covering, so it's easier for me. For example, just take an example of IRCTC. So IRCTCs, there was a signal of IV. Okay, there was an IV signal. So this would have indicated maybe an increase or a decrease in IV. Okay. So 1030 put option of IRCTC had an increase of IV by 10%. Okay. So increase in IV of 10.92%, so almost 11%. Okay. And its premium changed by 15%. So premium was up by 15%. Plus it was showcasing short covering. SC, you can see short covering means that the sellers who are selling this particular put option have squared off. So there is a very good chance that IRCTC was falling. Right? Same thing with IOC. IOC, you can see multiple strikes have experienced short covering on the put side, and they have an increase in IV. So that's a good chance. Tech Mahindra, call option has increased in terms of IV, and there is short covering. So there is a good chance Tech Mahindra was going up, and so on and so forth. So this is something that you can easily analyze during the live market. So this is how I use it. This is how a lot of other traders, expert level traders are also using it. So I believe that this is something that you can use as well. All right. Another thing, if you want to use it for, let's say, option writing. If you want to use it for option writing, then what I like to do, instead of short covering, I'll just set as short. Instead of short covering, I'll just set it to short. Why? Because I want there to be a decrease in premium and an increase in open interest. So short build-up will signify that open interest is adding, but premiums are decreasing. So if I'm writing options, then this is something that I use, right? So here I can see that in terms of IV, there's an IV signal for Ashok Leyland. There is a decrease in IV, decrease by 4.59%. Okay. And there is a decrease in premium by negative 17%, which is a good thing, right? So there is a short built up. Ashok Leyland, this particular option I can sell, right? Apollo Hospital, again, the same thing. India Hotel, same thing. If there is an increase in IV, but still it is showing short, then we ignore, right? Like for short covering, we could see, if I just add short covering here, you could see that at some places like Aarti Industries, IV is decreasing, but premium is increasing. So we ignore this. Ultra Cement, also same case. IV is decreasing, premium is increasing. So this might be temporary. Whatever the increase in premium is, that could be temporary. So it's better if you just ignore all of those things. So this is one of the best things that you can use to track unusual change in options and trade your options accordingly. Okay. Another thing you can do here is you can also look at futures as well. You can also look at multiple things. Let's look at some examples now. I actually want to see if there was a good example, or at what time there was this signal. Okay. So IRCTC, IOC. Let's open charts. So IRCTC, there was short covering in puts. IOC also, there was short covering in puts. And Tech Mahindra, there was short covering in calls. So these three stocks we will look at. IRCTC. So IRCTC should be falling technically because put has short covering. So IRCTC, there should be a fall. So you can see IRCTC was actually falling from the morning itself. So there would have been multiple signals throughout the day. So as of now, it's not showing any signals because it's market closing. So it just shows you the last of the signals, but throughout the day, there might have been a lot more signals. Okay. Maybe in the morning, there might have been some bullish signals. Then there might have been some bearish signals. So this is a good thing. Okay. We are looking at IOC as well. If I add IOC here, IOC, same thing. You can see IOC has fallen down. So that as well. Let's see if Tech Mahindra checks out. I'll just add Tech Mahindra. Okay, so Tech Mahindra is the one where the signal was generated towards the end and the price change was minor. So the premium might have increased, but not by much. So that is fine. Tech Mahindra, one signal went wrong, but the other signals were correct. Let's look at the short ones instead of short covering. Let's look at the ones that were where there was short built up. Okay, so we had Ashok Leyland, Apollo Hospital. So India Hotel. Okay, Tech Mahindra had one on the put side. Okay, so Tech Mahindra had one on the put side. There was short on put and short covering on call. So that is fine. Okay, so maybe there is a good chance of this. Okay, so this was good actually. You should have sold the put option, but it's fine. Okay. Let's look at India Hotel. Let's look at Bank of Baroda and Apollo Hospital. Okay, Bank of Baroda and Apollo Hospital. Let's see, Bank of Baroda has fallen. Okay, Bank of Baroda has fallen since morning, so this is a good idea. Okay, Bank of Baroda. And then we looked at Apollo Hospital. Apollo Hospital, let's check Apollo Hospital. Okay, so Apollo Hospital also has fallen from the morning itself. From not from morning, but somewhere around morning, around 10 a.m. It started falling and it has not stopped. So there was a nice fall in all of these stocks. So that is how you analyze, this data. It's a very simple to use, and I would say that it's not that difficult as well, right? You can see there are a lot more signals that you can see. I don't think. Okay, right. You cannot scroll a lot more, but there were some signals there. All right. Okay. So that is it for me. So I hope you guys enjoyed this video. I hope you guys learned something new. I hope there was a new concept. I hope you guys enjoyed this video. And I hope you can use this to the fullest during the live market, because this is something that I have tested for a while now and it works really well, especially when you are trading on an intraday basis. I'll also showcase one method maybe for exits as well. So a lot of people might be wondering, let's say if I buy an option or if I sell an option, what would be the exit scenario? So let's just take IRCTC's this particular strike, for example, or IOC's, let's take this particular option. Okay, IOC is not that liquid, IRCTC is decently liquid. So let's take this as an example. So 1030, okay, 1030 put option, IRCTC 1030 put option. IRCTC 27 June, 1030 put option. We'll add that. Let's add a 5-minute chart. So how I like to trade, let's say, for example, you captured a signal somewhere around here at 230. Just a simple example. Okay. I simply add EMA. So exponential moving average is something that I use. All right. So I set the length as 20. So last 20 candles EMA is something that I use. So let's say if you entered a trade somewhere around here, if a candle closes below EMA, and if the low of that candle is broken, you will square off. So this could be your stop loss, and this could also be your trailing. You can also trail your profits. Like for example, if I had, let's say, entered a trade somewhere around here, just an example, I would have squared off somewhere around here. Right. So this is how you trail your stop losses as well. So there was a decent profit here. Similarly, like IRCTC, is there any other Ultra Cement? Ultra Cement, which option was that? Okay, Ultra Cement, let's look at, okay, Ultra Cement, the IV was decreased, so you would not enter the trade. Aside from IOC, is there anything else? Mm, M&M. Okay. M&M had a signal 3000 put option for M&M. It had an increase in IV and an increase in premium as well. Let's check out this. Okay, M&M, Mahindra and Mahindra. 27th June, 3000 put option. Okay, 3000 put option. Same thing, you can see that it can be used kind of like that. All right, now let's take one on the short side. So let's just go to short instead of short covering. And let's see a particular option that has an increase, as a decrease in particular. Let's take maybe decrease in IV and decrease in premium. Let's take Bank of Baroda call option, right? 275 call option for Bank of Baroda. Bank of Baroda 275 call option. Okay. Bank of Baroda 275 call option. You can add this as well. Right, you can see that there is a nice fall here. So let's say if I entered a trade somewhere around here, let's say if I sold this option around here, I would have squared off on the high of this candle. So you can see that this is actually a textbook example, right? So on the low of this candle, I would enter, and maybe on the high of this candle, I would exit. Right? This is a hypothetical entry. I'm not saying that the signal might have arrived here, but still you get the point. All right. So this is where you would exit it. It's as simple as that. All right, so that is it. I'm sorry I forgot about the exits, but I just pictured that you will comment about the exits and the stop losses. So you can use EMA. EMA is something that a lot of traders already use, so you can use it as well. All right, thank you so much, guys. Thank you so much for joining me in this short video, not too lengthy. And I will see you guys very soon in the next video. Thank you so much, guys.